Good morning, one and all present here. Myself, Dr. Kavita from Institute of Commerce, Sage University. Today, discuss some point of the management accounting. And today's topic of introduction of management accounting. Accounting is an ancient art as old as money. However, the role of accounting has changing with the economies and the social development. The traditional view of accounting as a historical description of financial activities is no longer acceptable. Accounting now is regarded as services activity, the functions of which is to provide quantitative information about economic activities. Development of accounting in India. Chanakya in the Earth Shastra has emphasized the existence and need of proper accounting and auditing. However, modern system of accounting owns its origin who lived in Italy in the 15th century. The advent of industrial revolution has resulted in large sales production, cutthroat competition, and binding of the market. This has resulted in the decentralization of authority and control. Accounting today, therefore, cannot be the same and it used to be about the half a century ago. Changes in the technology have also brought a remarkable change in the field of accounting. It means there may be most of changing in the divergence in the management accounting. Accountancy is the art of communicating financial information about a business entity to users such as a shareholder and the managers. And the communication is generally is the financial form statement that show in money term the economy's resources under the control of management. And the art lie is selecting the information that is relevant to the user and is the reliable. Basically, the classification of accounting is the first is the financial accounting, second is the management accounting, and third is the cost accounting. Financial accounting. According to the American Institute of Certified Public Accountant, the art of recording, classifying, and summarizing is in significant manner and in terms of money, transactions, and events which are in the part at least of financial character and interpreting the result therefore. Functions of the financial accounting, recording, classification of data, summarizing, deals with the financial transactions, and interpreting the financial information. Some limitations of the financial accounting, basically the very important, historical in nature, provide information about the concern as a whole, not helpful in the price fixation. Only actual costs are recorded, no helpful in the taking the strategic decisions, changes of the manipulation. Cost accounting is what? Basically, the cost accounting is specialized branches of accounting in management cost refer to expenditure and not the price. Costing in the techniques and the process of ascertaining cost. It consists of the principles and rules which are used to ascertaining the cost of product and services. Objectives of cost accounting. Analyze the ascertaining of cost. Second, presentation of cost and cost reduction and cost control. Planning and decision making also. Importance and advantages of cost accounting. First, cost accounting is an aid to management. Second, the advantages to employees. Third, the advantages to creditors, investors, and bankers. Advantages to the government and the society. First is the management accounting. The term of management accounting refer to accounting for the management. That is the accounting which provide necessary information to the management for discharging its function. The functions are planning, organizing, directing, and controlling of business operations. Basically, the characteristics of management accounting. First, the providing informations of accounting. Second thing is that the cause and effects of accounting and analyzing also. Third, help to take the important decision, help in achieving of objectives, Then the historical data. No fixed norms followed, increase in efficiency, help in coordinations. Scope of management accounting. Basically, first is the financial accounting, second is the cost accounting, and third is the budgeting and the forecasting. Inventory control, financial management, reporting to management, and cost control policies. Internal audit, tax accounting, and office services. Difference between the management accounting and the financial accounting. The main point of the discuss below the sub is the objectives. Financial accounting is designed to supply information in the form of profit and loss account and the balance sheet. Shareholders, creditors, banks, and investors also know it. Management accounting is entitled to help management in the formulating policies and plans which in internals. Analyzing and the performances. Financial accounting portray the positions of business as a whole and the financial statement like income statement, balance sheet, reports on overall performance of the business. On the other hand, the management accounting directs its attention to the various division departments of the business and report about the performances, etc., of each of them. Nature. Financial accounting is mainly concerned with the historical data. It records only those transactions which have already taken place. Management accounting deal with the projection of data for the future, therefore, offer the suppliers of data present and the future duly analyzed and in the details in the management language. Monetary management, it the financial accounting only, such as the economic events, find the place which can be described in money. However, the management is equally interested in non-monetary economics, event with technology innovations and personal in the organizational, etc. Then the legal consequences. Financial accounting has been compulsory for companies, whereas the management accounting is not.